There are enough and more reasons why market should have not gone higher. There were enough and more factors which were centered around rich valuations, froth in the system. But those concerns have suddenly faded away. Both in terms of direction and in terms of market and in terms of momentum, markets have delightfully surprised. They've delightfully surprised everybody. Nifty at an all-time high, the comeback in small and mid-cap stocks. It's very heartening to see that large part of the collateral damage, what we saw, I think in financial, at least in stocks, individual stocks, that seems to be getting diluted. Now here's the trader screen. Global cues, I would say they are encouraging. Net flows are positive, and we've seen what could be called as bout of short covering. Now what has led to this kind of an rally? See, there was a fear that at least in mid-March that there would be very strong regulatory action or regulatory intervention in the small and the mid-cap stocks. That fear, after ET Now did a story that the regulatory government is against any regulatory action, that fear has faded away. Globally, the Goldilocks scenario continues. Gold is up, Bitcoin is up. The markets which matter, they are not far away from its life high. DI buying continues, and we've seen a bout of short covering. Combine all that, what have we seen? We've seen, I think, a very strong comeback by the bulls. The bears had enough and more reason why market should go lower, but thankfully those fears have not translated into reality. See, Avan, the momentum and direction is strong, so you have to be on the long side of the trade. There is no point in trying to prejudge that, okay, this would be a 2% rally or this would be a 3% rally at max, and then you should take some chips off the table. Typically, when markets after such a strong bout of volatility, when they recover and when breadth is strong, when flows are strong, when global cues are strong, the markets, they tend to always surprise on the upside rather than giving you short bouts of swing. So looking at the structure, the pattern and the global setup, it appears that the current leg of the up move has potential to stretch itself. I think from a market standpoint, HDFC Bank is important because the Bank Nifty is not at an all-time high and the Bank Nifty needs some kind of leadership. So the pivot stock really which could be the mood decider for benchmark indices, especially for the Bank Nifty, could be HDFC Bank. And can HDFC Bank, because of its weightage, can it come back and make a difference for Nifty, which in a sense is really looking for that next leader, so to speak. F&O positions are very light. So now we'll have to see whether the bout of short covering gets over and we see genuine long. So what happened in the month of March was we saw short covering. Everybody thought that there would be a breakdown. The breakdown has not happened. Now markets have normalized. Nifty has moved to a new high. Typically when Nifty moves to a new high, it needs a support and it needs a leader. And if that comes from HDFC Bank, then because F&O positions are light, the market actually could rally further from here. So the mix of ingredients, global cues, strength in Bitcoin, DIIs, stability coming back in small and mid-cap stocks, they are pointing to the fact that the market has still some more juice left, and the momentum and direction, they both are strong, and it may remain like this for a while.